Okay, perfect. Sorry about that. Just need to sort out the recording of it. Okay, so let's just quickly run through the disclaimer. Please take note that this presentation is purely for educational purposes. Does not take the specific investment objectives, financial situation, or particular needs of any particular person. Okay, moving on. So let me just go through your theory first. So if you attended the sessions before, how I normally analyze the market is purely using price action. And I think it's very important, especially if you're new to trading, is to see what the market is trying to do, whether it's consolidating or it's trending, regardless of time frame. So you can be a long-term trader, you can be a scalper, you can be a swing trader, but you still need to know what the market is trying to do. So you basically combine price action with multiple time frames. When I say multiple time frames, means your 1 minute chart, your 4 hour chart, your daily chart, and you try to do a plan. You try to plan the trade around it. Okay, so if you talk about price action, right now, how many of you here are not familiar with price action at all? Like zero knowledge of price action. Any of you not familiar with price action at all? Crystal, you're not familiar, is it? Okay. Well, I mean, I think there's a you go to the website, there should be one recorded webinar whereby I cover pure theory on price action. That might be useful because if you want to understand price action, right, I think it's much better watching the webinar first. Because if not doing the live market analysis, feel free to shout out and I'll try to clarify for you. Okay. Because once you learn price action, you realize that it's actually a very powerful way of analyzing the market. It's actually a leading indicator to me because it gives you an understanding of what the market is trying to do, and then from there you can plan your entries, and then you can combine it with lagging indicators like your MACD, your stochastics, and try to form a trade plan. Okay, so any questions you can shout out first, Crystal. How about any other of you who are not familiar with price action? Okay, so let me just add something to the webinar today before I go to live markets. Yeah, there are a few things that you want to take note of when it comes to a corrective market. Okay, so normally, let's say you establish a trend in the market. Let's say the market is an uptrend, right? Okay, and then there's a correction. Okay, so this is one type of correction, the first type of correction. Okay, it's actually a counter trend correction. All right, because you see, why is counter trend is because the trend is up. Okay, but the correction is towards the downside. That's why it's counter trend correction. The second type of correction, okay, is basically same thing, uptrend, and then the market consolidates and then breaks out. So it's now found correction, number two. And the third form of correction is basically, again, markets uptrending and it's moving sideways like that. Okay, number three. So the first one is counter trend, the second one is with trend, and the third one, I'll call it horizontal. Okay, I hope you guys can see. Let me just, hold on, yeah. Let me try to improve the, yeah, that's better, isn't it? Sorry. Okay, so out of these three corrections, right, which one do you think is the easiest? Easiest means that the trend has the highest probability of continuing. Number one, number two, or number three. So all three, in terms of the overall trend, is up. Okay, I'm just talking about corrections right now. So the first one is called counter trend correction. Second one is a with trend correction. And the third one is a horizontal correction. So out of these three, which one do you think is the easiest to trade? Has the highest probability of it continuing up? 1, 2, or 3? Okay, you can actually see that. I mean, in terms of how, yep. So in terms of which one has the highest probability of going up, right? I would say the second and third one. Okay, but actually in terms of trading, the third one is the easiest to trade simply because it's horizontal. So the pullback, the counter trend traders are not as strong as the first one. And secondly, because it's a horizontal consolidation, the levels are more identifiable. Okay, or the levels are clearer to the trader. So what you can do is, let's say if you identify an uptrend, okay, and it is consolidating in a sideways pattern, something like what I have here, what you can do is basically look out for the support levels, okay, or you wait for the resistance to be broken out, something broken up before continuing up. All right. The first one though, now I notice a lot of clients I speak to in terms of the first one. Now it is on an uptrend, and it's a counter trend consolidation. It's a bit more tricky. Okay, I'm not saying that the trend will not continue. It still might. Okay, because if you look at the chart pattern, this is actually called bullish flag, isn't it? But what I'm saying is that the flag, right, or the counter trend consolidation or correction. Okay, sometimes when you buy it here, thinking that this point here, there's good support, and it might start moving up from there, what it might do is sometimes it might go through another level before it moves up and then it gets stopped out. Okay, so it happens a lot. Okay, so when it comes to counter trend correction patterns like that, right, be a bit more patient. Okay, be a bit more patient. Number 2 and number 3 is definitely easier to trade. Okay, I just thought of sharing a bit of theory with you before I start the live market analysis. This is also price action, okay, but you just got to be able to identify these 3 types of different corrections in the markets. I'll show it to you later. Okay, so moving forward, let me just erase this. Okay, let's go to the live markets now. Okay, so let's start with indices. Okay, now you look at the S&P, right? In fact, you look at most of the indices, it just keeps moving higher and higher and higher. Okay, I have a lot of clients, a lot of traders I speak to who just can't point a finger on why the market is going so high. Okay, neither can I. Okay, but again, our job as retail traders is not to know why the market is doing so and so, but it's simply to follow it, right? And if you look at the VIX, right? If you guys don't know what the VIX is the volatility index. Okay, basically they are pricing it from options and basically gauging how volatile the market is. If you look at the weekly chart of the VIX, now let me zoom up for you. Okay, if you look at this is 2017 here, 2016. So you notice the highs here of the when you hit 20, 22, 24. This November period was because of the election. This was because of Brexit, and then early 2016. This was because of the, if I'm not wrong, it was the China circuit breakers issue as well as the oil crisis early 2016. Okay, so 2016 was pretty volatile here. If you notice that the VIX always pops up whenever it hits around 14, 15, it will pop up to 20 and then come back down. But if you look at where we are right now, okay, it's really, really interesting because if I draw a line across, right, and this chart I have is dating all the way back to 2012, okay, we are really at the low point. Okay, we are really at the low point of the VIX if you compare historically. Okay, I don't have a longer term chart thing, but if you pull back all the way to the 90s, right, historically the VIX, this is quite on the low side, I would say. Now, don't forget, this chart I'm showing you is a futures chart. Okay, so if you go to Yahoo or you Google VIX, right, the VIX that you see, the price might be different from the price I'm showing you right now. Okay, because the price I'm showing right now is a futures chart. But what I'm saying is that regardless of price, we are at a really low level for the VIX. And if you read some Bloomberg reports, they say that the market smells of complacency. The rallies in the indices, the equities market doesn't make sense. But it is what it is. Okay, and it's really hard to play the guessing game to know when the S&P might make a big correction or might reverse, or when the VIX will start shooting up again. I think most of the reason why most traders or investors are getting so-called tricked right now is because when things like Brexit or Donald Trump winning the election came to play last year, everybody expected for the market to have a lot of volatility, to have a lot of unexpected news, especially entering 2017. But so far, it has not happened. In fact, I think Trump's inauguration speech last week, I expected a bit more volatility as well, but he delivered. I mean, people like what he said, okay, and the market still remain rather muted. Okay, but it is what it is. You got to accept it. So just be a bit mindful as a trader. Okay, put that in the back of your mind, but try not to time it. Just follow the markets first. Okay, so there's the VIX for you. I just want to show you the chart because we are in a very interesting level. If hi Leonard, sorry, yeah, your question is VIX is like the fear factor, right? Yeah, something like that. Something like that. So whenever the VIX, whenever the market panics or there's something happening, the VIX will bounce up. Okay, right now it's almost the third month, 2017. It has still been very, very quiet. In fact, for those of you who trade a lot of FX, if you notice the way the chart moves or the way the price moves is really very low in terms of, you take the indicator called the average true range, ATR, we are also at the all-time low. Okay, I mean, especially if you are familiar with the 4-hour chart or daily chart. Okay, a candle daily chart move can be normally 200-300 pips a day, but if for like the pound pairs. But if you compare it now, it's really not much. It's really not much. Okay, so just be mindful of this situation right now as traders. If you are waiting for the market to drop, waiting for the reversal, just be a bit more patient. All right. Okay, so let's take a look at the S&P. So it has been making new highs since February. The next level of resistance, okay, it's really hard to plot what level of resistance is besides taking the whole number price. Okay, because there's no historical resistance to look at. Okay, so 2300 was the first level, which I drew. You see this line? Oh, sorry. Okay, you can see, just expand it. Let's see this line here. 2300. So that's the first, just delete some of the lines, not so confusing. 1, 2, 3, 4. Okay. Whew, so much clearer. Okay, so 2300 was the first level that I drew. You can see the double top here. Okay, and a bit of ascending triangle consolidation. Okay, but we broke it in February and it made another all-time high, 2400. So the next level I'm looking at is 2400. If you zoom in slightly to a lower time frame, the 4-hour chart, you can see that the 2400 level, okay, once it has been hit, I think there are a lot of take profit positions there, which is why the market drifted downwards. In fact, the whole move to 2400 got reversed and we are back to the 2370 level. Okay, still in the uptrend for sure, still in the uptrend, but the next week or so, I expect some form of consolidation. So the key level that to look out for, okay, if you look at the 4-hour chart, this 2368 to 2370 level, that is support for you, short-term support. Okay, I'm not surprised if we make a push back up to maybe around the 2390, 240 area, but I expect some form of consolidation. Okay, I can't see what kind of consolidation is forming yet, but these are levels I'm looking at: 2370, 2400. Okay, if you look at the 1-hour chart, which is slightly more short-term, okay, you can see that it's just bouncing off this level here, the support that I drew. Okay, so nothing much to do with regards to the S&P. If you're looking for short-term trades to the long side, you can use the 1-hour chart as a gauge. Okay, just take note of the resistance around the 2375 level. 2375 level. Okay, and the next, so this is the key level here, this support here which I drew, and the resistance here. Okay, so if you're bullish, either look for support or look for the break of the resistance. Okay, if you are bearish, for me, I would rather let it break below the 2370 support first, and then I'll consider looking for shorts. All right, but these are the key short-term areas you want to look out for. So there's the S&P for you. I think mostly short-term plays. In terms of long-term plays, not much to the upside and the downside. You got to be a bit more patient. Okay, any questions? Okay, so moving on to the DAX, the German 30 cash. So what you can see here for the DAX is on the daily chart, still an uptrend. Okay, it looks quite similar to the S&P. No divergence here. You can see that it's supported by this nice trend line here. The key level support is around the 11,850 area, 11,850 to 860 area. Okay, there's a key level support, but it's definitely still an uptrend. Going to a lower term time frame, you can see that similar to S&P, the whole rally in early March, February to March actually reversed downwards. Okay, and we might come back to this trend line support here around 11,009. Just zoom in a bit more. Okay, you can see now one way to see whether the bulls are coming back to play is basically if it breaks this level. Okay, if we clearly break the 11,009 to 12,000 level again, then there's a high chance we might try to push for new highs. All right, but if you look at the 1-hour chart, it's clearer to you. See this line I drew here? So if we can break this 11,980 level, high chance that we might push higher and test the previous highs around 12,050 or so. Okay, but similar to the S&P, I would say a bit shorter term kind of trades based on the previous highs as well as the short-term support levels. Okay, it's just that most of these indices have reached all-time highs. Even if I'm going long, I'll be very cautious. I'll be very cautious. I'll keep it short term first. Okay, but right now, most of the charts are still on the bullish side. Okay, so use the short term charts to guide you. So that's the DEX for you. Again, if you guys got any questions, please shout out. Yeah. Even if you don't disagree with my analysis, shout out as well. Then we can have a little discussion. Let's go to the Hang Seng. Okay, Hang Seng bullish as well. Right now we are a nice support level around the 23,500 level or so. This line 23,500. I expect certain reaction from here, maybe back to the 23,800 level. But daily is uptrend. This is a good support level. If you look at the 4-hour chart, okay, this is what I'm talking about. Remember in the beginning of the webinar, I was talking about 3 different types of corrective structures. So if you look at this Hang Seng, right, this is one of a typical corrective structure that I'm talking about. Okay, and this is basically a counter trend corrective structure. Okay, which if you're looking to go long based on the daily trend to the upside, you got to be patient because the shorter term traders are still trying to push it down. Okay, daily is up, yes, but the medium to shorter term time frame, like a 4-hour chart, is still down. Okay, but right now there are little signs that the bulls might come to play again. Now, what are the little signs? If you look at the previous bunch of candles here, okay, how many candles is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I got 15, 16 candles. Okay, for the past 16 candles, we are living above the support of around 23500 level. Okay, MACD is forming higher low, price is forming higher low, good convergence. Key resistance right now to note 23,700. If 23,700 breaks, high chance that we might start moving up to the previous resistance levels around the 23,900 or even 24,000. Okay, so there is a little sign that the bulls are coming back to play. But this is exactly what I'm talking about in the beginning of the webinar in terms of corrective structure. This is the one of the tougher corrective structure to trades because it's a counter trend corrective structure as compared to a horizontal one or a with trend one. Okay, so for this case, you're looking to trade with the trend, be a bit more patient. Be a bit more patient, okay? But the good thing is that the 4-hour is showing signs that you might want to turn up. So you got to let it break this resistance first, around 23,700, okay? Or if it comes back to test the support again, that's another level that you can look for long side. Okay, if you are a if you're trading with the daily trend. Okay, now if you are trading to the short side, okay, the only level where you can look for shorts is the resistance that we have not been broken for the past 2 weeks or so, around the 23,700. So you can see every time it touches here, it comes down. Touches here, it comes down, and now it's trying to touch here again. Okay, but if it breaks 23,700 convincingly, then it's the time to get out because that's where your bullish traders will be looking in the daily chart and say, okay, uptrend, I'm willing to take it up again, maybe back to the previous highs near the 24,000 levels. Okay, so again, it's a balance of seeing what the market is doing, which time frame is your reference charts, and what are you trying to trade? What's the trade plan? Okay. Oh, I deleted the. Okay, never mind. But basically, know what your reference chart is. Very important. What are you planning your trade? What's your trade plan based on? Which time frame? If it's based on daily chart, it's one thing. If it's based on 1 minute chart, it's another thing altogether. Yep. So that's the Hang Seng for you. The Nikkei. Crystal is still following, right? If you're not, please shout out. Yep. Okay, Nikkei seems pretty obvious. Okay, it's a bit more straightforward than the DAX or the S&P because it's simply consolidating. Yeah, I think on 1st of March last week, you see this daily candle, very bullish candle, but it was unable to break the key resistance of around 19,650 or so, 19650. So you see what happened, that the candle, this candle is very bullish, but it followed by 3 or 4 consecutive bearish candles. Okay, so there was not enough momentum on the bullish side to push it, to break it past the resistance. So I would say it's a bit more consolidating right now. Right now, we're in the middle of nowhere. If you see the moving averages are bunched up, if you see we're in the middle of this range between 19,000 to 19,650. So just be a bit careful when you're trading between a range. If you go to shorter term chart, Okay, you can see that there's a very short-term support near the 19,300 area. Okay, this line I drew. Okay, there's short-term support there. In fact, you can adjust it slightly downwards. Yep, somewhere here. Okay, the short-term support here. Right now it's really 50-50. It's a bit hard to trade because we're not extreme sides. So if you're a bit more risk averse, I would say stay away. But if you're a bit more aggressive, then this area here will be a key. If it breaks 19.3, then it might go down to bottom of the range. If it starts moving up from here, it might go to top of the range around 19.6 or so. That's it. It's as simple as that, the analysis. Okay. If you look in the 1 hour chart, you can see that it's a bit more sideways here. Okay. So depends on what you're trading. Just be a bit careful because we're in a bit of a no man's land. Okay, but 19.3 is the short-term support that you want to look out for. Cynthia, you have a question. Is this Nikkei the type 3 consolidation? Let me see. I'm assuming your reference chart is a daily chart, right, Cynthia? Okay, Cynthia's question is, based on this daily chart, is it the type 3 corrective structure that I was talking about in the beginning of the webinar? The answer is yes. Okay, the answer is yes. Because you can see that the resistance is very clearly defined. And that's what I like. Because if the resistance is clearly defined, if I can see it, you can see it, a lot of the traders can see it as well. And that's where technical analysis will work beautifully. Because if it breaks this clear resistance level at around 19,005 or 19,000, what's the level? 19,006 or so, then clearly it will hit towards the next level, which is 20,000. Okay, the support is also quite clear. Okay, if I draw this trend line, which I already drew for you, and let me just extend it. Okay, you can see that the support is quite clear, and it comes with support of around 19,000. Okay, it's a very clear level of support that you can consider taking long trades from, and hopefully it will move up to resistance and then break through it. All right, so yes, correct, you're right, Cynthia. This is a type 3 kind of consolidation because it's so much easier to look up to see where the market is going because the levels are very clearly defined. So for this one, you got the trend line, you got the 19,000 level, and you got 19,600 level. Just pick your spot and know what you're doing, and then the market will take care of you. Okay, so that's Nikkei for you. Okay, so what else? Did I miss out any index? Let me go to Singapore blue chip right now. Any other index, please shout out, yeah? Okay, so Singapore blue chip, uptrend for sure. Okay, if you look at the daily chart, supported by this little trend line, and the resistance is around the 347. So this is, you can call it a ascending triangle kind of consolidation. We are reaching the apex of the consolidation, means something's got to give, either it will break downwards or upwards. Interesting thing to note on the daily chart is that if you look at the MACD, right, it's making lower highs, but on the chart it's making higher highs or similar highs. Okay, this is what we call a bearish divergence, which means that there's a good probability that the market might start coming down from here, maybe back to support level. Okay, so that's one sign of correction because of the bearish divergence in the MACD. If you look at the shorter term charts of 4 hour, you can see that there's a bit of a shorter term resistance where we are now, around 346. Okay, but you also can see that this consolidation is getting to a point whereby it's getting narrower and narrower. And I would probably wait to see whether it will break the support trend line or it break the 347 before jumping into trading this particular instrument. Okay, but if you look at the 1 hour chart, you can see that the line that I just drew, this short-term support line or resistance line, sorry, at around 346 looks to be pretty decent, okay, because there are quite a number of touches. And if this level breaks, right, which it might, because if you look at the 1 hour chart, you can see higher low, higher low, higher low. So the momentum, there's a squeeze, okay, there's a momentum squeeze to the upside. So if it breaks 346, then it might come and test the previous high around 347 or so. Okay, so again, quite similar to most of the indices. If you're planning any trades, keep it short term first. And look for the previous high if you're following the trend, because I'm not sure whether they can make new highs any longer. Same thing for the Singapore blue chip. Okay, the high for this one's about 347. All right, any questions regarding indices? If not, I'll move on to FX. Or any particular indices that you'd like me to cover? If you guys have any questions, yeah, just feel free to shout out because I mean the webinar is meant to be interactive and it's not if not it's very boring. Okay, so I'll move on to I'll take a 10 second pause and then I'll move on to FX.